It is November 23, 2024. My name is Daniel Sinek, and I'm greeting you from our beautiful office here in Montreal. Today's objective, once again, is to scan for the week ahead. But before we get started, let me quickly introduce ourselves. So we are tradingindicators.com. My name is Daniel Sinek. I'm the guy here on the left-hand side, and we have started Trading Indicators about 10 years ago together with Homa here in the middle. And over the course of the years, we've built hundreds, almost thousands of trading indicators for clients all over the world. Most of what we do is based and rooted on what's called technical analysis, which is basically a mathematical analysis of your price chart. And we believe by, doing this, we will indirectly also take into account fundamental information because these are almost immediately priced in. We believe that trading should be simple, and trading is simple, but you need to use the right tools and you need to know what to look for. And this is exactly what this session will be all about. We're going to show you the tool, which will show you also what to look for. So both things together. And one more thing, this session is for you. So if you have any questions, whatever it is, please put it into the Q&A box and we'll be happy to go over all your questions as we go through this webinar. All right. Also, a quick reminder that trading does contain substantial risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is actually money that you can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies discussed in this scanning session should not be construed as trade advice. These are for educational purposes only. All right. All right. And one last reminder before we really get into it. Tomorrow, we will go online once again. This has been a very busy week for us. So once again, tomorrow, we will be back with a free options webinar tomorrow at 2 p.m. Eastern, featuring Jim Kenny, the option professor. There's also a specific reason for this because we believe, and the option professor believes, that we are at the very specific crossroads with very unique opportunities. So we need to have this webinar because we want to share with you what these opportunities are for the next coming weeks and months, because option pricing at a unique, very low price right now, and we expect volatility to pick up very soon. And how you can take advantage of all this, you will find out tomorrow at 2 p.m. Eastern. And here is the link to register. And Nicholas, please also put this link into the Q&A box. All right, perfect. So now, really, let's get started with our scanning session. So what we will do today is we will interactively scan for high reward and low risk setups. And for this, we will use our Liquidity View dashboard. Now, I'm going to be doing the demo, but I think it would be best if you guys could follow along. So if you want to follow along, you still have the opportunity, because if you sign up for a free trial of our Liquidity View dashboard, you will get access right away within a minute or maybe less. And that way you can replicate the exact same scans and setups that I am seeing here on my screen. And of course, if you decide to stick along, after the free trial, we have interesting monthly and yearly options for this as well. Keep in mind, there's no contract whatsoever. You can cancel at any time. All right, so this is an opportunity for you to follow along if you want to take advantage of this option. And one last thing, we have also put together an ebook called The Power of 3, which discusses in much more detail than this webinar what our key setups look like. What are these high reward and low risk setups all about? And why do they work? Why do we think they are so powerful? So if you want to check it out, this ebook is completely free. Simply go to tradingindicators.com/power of 3. And this link will also be in the Q&A, in the chat window. All right. And I promise we are nearing getting into the scanning session. Just one more thing. This is already our 7th live scanning session. It has been a huge success. It's been so popular, which motivated us to almost offer these every single weekend. And what was really cool too is that we got so much amazing feedback from you guys on how to further improve it. For example, from session 1, we added a feature which indicates the duration or the freshness of a setup. Implemented. From session 2, we added trade notes. That's finished. From session 3, we added brand new scans, such as a pullback scan to the dashboard, something that we will be using today. Implemented. From session 4, we improved our trade notes, and it's also from session 5. And from last week's session, we improved our filter capabilities. Wow. So all these great new ideas, they came from your feedback and from having these live scanning sessions. So thank you so much, guys, for this. And this is to say, please keep it coming. If you have any suggestions, don't be shy. Put them into the Q&A box, and we will, we will take advantage. We will take all these into account. Not take advantage of you. My apologies. We will take these into account for a future new version of the dashboard. And Philip, he just put a little note into the Q&A box that you will get a dangerous website warning when clicking on the link. Yes, probably this is because of Norton antivirus. And so I just have to comment on this because we had a couple of users who actually saw this. So if you go to the Power of 3 or to any of our other links, these are all redirects. So you click on it, because this is a short link. This will redirect to a more complicated link, which is longer to enter. And sometimes an antivirus tool will pick this up as a potential threat, but I guarantee you there is no threat whatsoever. And perhaps Homo or Niklas, you can put the direct link into the chat box instead. Therefore, there is no redirect. Okay, so please keep up your feedback, and we're going to use this to further improve our dashboard. Now, let's talk about these high reward and low risk setups that we will be scanning for. Now, one key characteristic of these setups is that typically, not just typically, actually always, the profit potential will outweigh your risk, and oftentimes by a multiple. These setups, however, they require, in order to make this happen, a tight stop loss. This is something you need to be aware of, because if you use a tight stop loss, you might get stopped out. It's part of the game. It's completely, normal to be stopped out every once in a while. But I don't want you guys to be discouraged by this. Just please be aware of it. It's part of the game, because if we get stopped out, we stand to lose a little bit. We may even get stopped a second time. And if we are right, we stand to gain a lot. And this is exactly what we are looking for today. All right, so the way we're going to do it is we're going to scan for one setup at a time. And based on what we see in our live scan, we're going to create a hot list using the watch list feature of the dashboard. And we're going to then go through this watch list step by step to do a detailed analysis and annotate our watch list with some trade notes. All right, so what are these setups? And actually, we used to have 3, but now we're going to call this the Power of 3 Plus, because we have added one more setup to it. So we used to have bounce, zone break retrace, zone break and zone break retrace. All of these are, high reward and low risk. But we're going to add another one called the healthy pullback setup, which is also exactly in the same realm. It's also low risk and high reward. And in fact, let's start with that one, because I feel, and maybe you guys can correct me if I'm wrong, but I feel this perhaps is the simplest one and the most intuitive one. Let me explain to you why. Because in a simple pullback or healthy pullback setup, all you need to have is a trending stock, something like this. You can see this is obviously trending up very nicely, and a correction which has happened recently. And then the expectation is, because we all know, hey, the trend is your friend, this trend may as well continue to the upside. And now this correction, this dip presents us with a very unique opportunity to re-enter into this trend trade at a much better price than it used to be and with less risk on the table. So to me, it kind of feels like an intuitive setup. And the way we're going to scan for this is as follows. We're going to look for stocks which are in a long-term uptrend using our MA Rush indicator, and we will be looking for a pullback using our Trend Radar indicator. And how does Trend Radar signal a pullback? You can see it here very nicely. See this last row here, which is all green? This denotes our long-term trend. So the long-term trend, without any exception, is completely bullish across the board. But every once in a while, we have a little red patch. And these are the pullbacks. And these are key opportunities to re-enter into this trend trade. Of course, hindsight is 2020. We all know this. But just imagine for a second, we would have bought every single dip. This would have worked out every single time with these kind of stocks. So to me, a very intuitive way to find interesting trade setups. Now, without further ado, let's get into this and scan for exactly these setups. I'm going to switch over to our Liquidity View dashboard. There we go. And this is Trading View. This is not the dashboard. I'm going to open it up. And I just was checking out some stuff. But before we get into the dashboard itself, I just want to say something about these pullbacks. Because people are talking, oh yeah, the S&P index, it's due for a correction, maybe even for a trend reversal. And people even said, hey, after last week's sell-off, oh my God, this is going to be the beginning of a bearish trend or whatever. I politely disagree with all of this because let's just see what's happening here with the SPY and just observe a little bit what we can see here on this price chart. So I'm going to make it a little bit bigger. And what do we see here? Well, I don't know about you. I see, like, at least starting from last year at the same time, I see all green on our last row here in Trend Radar. Would you agree? And even if you zoom back a bit further, man, we are bullish as per MA Rush. This is our MA Rush indicator since May 2023, 1.5 years. Bullish with no doubt. We had one deeper correction here last year around October, a deeper one. But what we saw like 1 week ago, see this little downwards patch here? This was merely a level 2 pullback. It's not even a deep one. So I don't know where all this panic came in, but this was just a very, very minor pullback. And it seems to me that this pullback is has already come to an end, and we may see higher highs in the next week, finishing off this November with a strong bullish finish. Traditionally, and this is seasonality, November trading seems to be very bullish as far as the S&P 500 is concerned. So no idea where this came from. This, on our book, at least with our technical indicators, this was just a minor pullback. Nonetheless, it could have been a really good opportunity to re-enter in the SPY. The only reason why we didn't call it out last week when we had our scanning session, whenever this happened, is because we had this gap. So I was a little bit worried and cautious that this gap, the election gap, so this was before the election, this one after, this may be getting closed. I mean, this correction might be a bit deeper. It doesn't look like it will be. So it seems to be continuing now. And it could still be a good opportunity to get into this now if you buy into the thesis that, hey, this long-term bullish move in the SPY is going to continue. All right. So this just for a bit of context. Now, let's go back and let's try to scan for some interesting setups. All right. So as you can see, we are tracking 4,933 stocks. All right. And what we're going to scan for right now to start off are stocks, which are long-term bullish and which currently have a pullback. All right, let's do it. So I'm going to switch over here in our MA Rush column with this filter icon here to only show us bullish stocks. And just one quick reminder, If you do not see this filter icon here, this means that filters are not enabled, but you can enable it by simply clicking this button. So if you click this button here, I disable these filters, which makes the view a little bit cleaner. But you can enable them or re-enable them by simply clicking on it, and you can see this filter icon here. All right, so we're going to click on it, and we will then filter by stocks. Oh, MA Rush, of course, filter by stocks which are bullish. And I want you to pay attention to one other thing. So right now we're tracking 4,933. Let's see how many of these we're going to filter out by simply focusing on bullish stocks. So I'm going to click on it, and this is instantaneous. There's not even a single millisecond in between. So click, and immediately we now filter down to only, of course in quotes, only 2,775 stocks. So that was super, super fast to do. And another thing which is of interest, of course, we're tracking some other assets here too, such as currency pairs and some cryptos, but it's primarily stocks in our scanner. What you can also see is that, there are slightly more bullish symbols in our scanner than bearish ones. Because if you're not bullish, you by definition must be bearish. There's nothing in between as per our MA Rush indicator. So it's slightly more bullish. And let me just quickly, just for the fun of it, actually, a little research study before we get into it. Let me quickly take this filter off again and enable the asset class column here and only focus on stocks. So here we have our asset class column and only focus on stocks. So how many do we have? Just out of curiosity. So 4,536 stocks are being tracked. Okay. But now let's do the same filter again for MA Rush, just to see all the bullish ones. So 2,400 are bullish out of 4,500. So that's probably around 60%. And this confirms a bias, which we have been using from the get-go. It confirms that stocks, not all of them, of course not, but on average, tend to be a bit more bullish than bearish. They tend to go up more than they go down on average. So here we have 60 stocks which are currently rather bullish than bearish, 60% stocks. So this confirms this bias. And this is one of the reasons why we primarily, when it comes to stock trading, and when it comes to swing trading, these are longer term trades, we focus on the bullish setups because we want to be in line with this bias. Okay, so now, but let me enable back at least the ETF. So we have and the indices here. So we have these ones included in whatever we're scanning for right now. So now we filtered for everything that's bullish. All right, that's good. And the next thing we're going to put on is to filter for everything that's bullish, but is currently in a pullback state. So I'm going to click on this one here on pullback, and we'll click on, let's say, level 3. So level 3 means, let me just quickly show this to you right now, if I can find it. There we go. Oh, actually, it's a bit hard to see here. So level 3 means, with the current logic of the dashboard, that we have at least 3 red patches in our trend radar indicator, while the very last row, that's the condition for everything, is green and has been green for at least 50 bars. That is exactly what the scan is all about. Just as a heads up, we will slightly tweak this logic probably next week, where we also require that for a level 3 pullback, the first 3 rows are reddish. I think that could be a good tweak to have. Okay, so we can see it here for this stock here. What's the first one? The Ensign Group Inc. Can see it here. Yes, we are definitely bullish and bullish for 1,080 trading days, because I also sorted for the duration of the bullish move. But as of late, we saw a bit of a pullback. This would have been even better here if we had this level 4 pullback, but even right now, we are still in a pullback state, and there's first signs that, hey, this correction after this all-time high that we had here perhaps has come to an end, and price now is continuing in the direction of the overarching trend, which is clearly bullish in this case. All right, so in order to keep track of these interesting setups, let me create next a watch list to keep track of all these. So I'm going to go to our scanning drop down here and click on create down here, and we'll enter interesting setups with today's date. So what do we have? 2024, 11/23. Create. Done. And we're going to add this stock. I think this could be an interesting one to our at least hot list that we're going to review a bit later on. So right click here, add this stock to our interesting setups. And I should really use the same nomenclature here for this watch list here, November 23, which is today's date. Done. Edit. Perfect. Okay, very good. Let's go to the next one. Gartner. Gartner is bullish for 1,011 trading days. That's years. These are trading days, not just weekdays. Weekends are skipped in this count. Bullish, but we also have a level 3 pullback. All right. So, and Paul, great question. I'm going to answer this in a second. Good question, Paul. So here we can clearly see Gartner made an all-time high. Beautiful. Great bullish move. We're making higher lows, higher highs along the way. Very nice. If we were to draw a trend line, it's a pretty clear uptrend when it comes to Gartner. I mean, you probably would agree. This is even almost parallel. But right now, which is beautiful, we are trading at the lower end of this trading channel. We found this because we scanned for a level 3 pullback. You can see it directly here. And in addition to this, which is even better, we also have a long break retrace setup as per Liquidity IQ. We're going to get to this in more detail in a bit, but this is a setup where we broke above resistance, which is now acting as support, and now we retraced back to this resistance level here. So broken resistance, when broken, will act as support. And this is exactly what happened here. So we have 3 different types of confirmation. We are in an uptrend. Number 1, this uptrend has been going on for a really long time, for 1,011 trading days. We just had a pullback, and we are trading at the lower end of the trend channel and near a broken resistance zone as per Liquidity IQ, which is now acting as support. So really, really cool. Okay, so now so for sure, I'm going to add this stock to our wish list, to our stocks or symbols to watch for the weeks to come. So Gartner as well. Done. All right. Now, Paul was asking a question, and it's a really good question. How can you save a scan? So let's say you picked your proper criteria that you wanted. You perhaps have a filter on asset classes, as we do right here, a filter on MA rush, and a filter for the pullback. Let's say you want to save this scan. This actually we've thought about quite a while back, and we've implemented a feature to do this maybe a couple of months ago. And the way to do it is through this button here, Add Dynamic Watch List. What this does is it will create a watch list based on your scan criteria. Let me just do this. So this could be a nice pullback scan, bullish pullback scan, whatever. So create. Once created, this watch list is done. And if you go to your drop down here, you can see it here, bullish pullback scan is right here. All right, so you can open this one up and you can see the exact same criteria are predefined. Now, this is, however, a dynamic watch list, meaning that these symbols in this watch list, they will dynamically update as new stocks qualify for these scan criteria and some stocks will disqualify for them. So every single day when new end of day data rolls in, this watch list will be dynamically updated. So Paul, hopefully this clarifies how you can save a scan. Let me go back to my end of day scanner. Okay, so we're back here and we're going to look at one more stock just for the fun of it. All right, what do we have here? Okay, this one here is perhaps not so interesting. I mean, it's pretty good. Just the uptrend, you can see it here, is not as smooth as some other symbols that we saw. Although, of course, it is trending up, but we had these huge corrections along the way. Maybe not the best one, especially still also trading right now near this resistance level. So if we're looking for, a bullish entry, keep in mind that here we are right at a resistance level. We can also see it here that Liquidity IQ shows this as a short bounce setup where we may bounce off this resistance zone. All right, perfect. And just one more example, just for the fun of it. Ooh, what is this? Oh, this one had earnings. Oh, it's an interesting one too. So here we can see we were trading at an all-time high, I believe, if you scroll back. So the trend has been going up for quite some time, even though we did have some, quite large pullbacks. In fact, this seems to be a stock which is very volatile, so maybe also not the best candidate. But in this case, maybe an interesting one, because what we saw here, and we may revisit this when we look at the other setups, we had an earnings gap. So clearly, I mean, I didn't check the earnings report, but clearly it seems to be that something happened. I believe perhaps it was earnings, and we gapped down to this resistance level here, which is now acting as support because it's broken at this point here. Earnings gaps tend to be filled over time. So if you buy into this thesis and combine it with, hey, this is just a healthy pullback within an overarching uptrend, the stock has been bullish for 937 trading days, perhaps this could be an interesting idea to go long here as well, because multiple things are coming together. But you know what? I'm going to skip this one. It's a bit too erratic for my taste, and we have more interesting stocks in our pool. And just one more here, Parson Corp. Let's see what this one is all about. As soon as this loads, this is a deep, deep correction. Albeit a nice one. Look at this, bullish for 659 trading days. We did have this big pullback exactly almost to the support zone here, which seems to be holding up, and we already see some signs that, hey, this one may continue now in the overarching direction of the long-term trend. So maybe this one I'm going to add also to our watch list. All right. Perfect. I hope this makes sense, and it shows you how easy it is to scan for interesting setups using a very simple formula combining long-term trend and a pullback. So as a trend trader, a pullback, a healthy pullback can be your best friend. Okay, so back to my slides. So we talked about the healthy pullback, but now let's talk about the second setup of ours, the bounce setup. So what is this one all about? So for this one, I also have a nice slide here. And the bounce setup happens if price, for example, there are two ways to do it, but if price, for example, nears a support zone. And support, being support, it oftentimes prevents price from powering through this level. And instead, this is where the name comes from, price will bounce off this level towards the middle, in between support and resistance. This can happen for the bullish case, where we're bouncing off to the long side. But of course, it can also happen for the bearish case, where price will bounce off a resistance level towards the middle in between support and resistance. And we like this setup a lot because it is truly a high reward, low risk setup, because you can place your stop loss just below this support level in the expectation that price will bounce off it. It will not be able to penetrate this level to the downside, and instead will bounce off. So very tight stop loss, and your profit target typically is a multiple of what you are risking. So let's scan for these ones. All right. So back to our scanner. Here we go. And let me clear everything up. Clean sheet, back to our 4,933 stocks. Great. So how can we do this? Well, in this case, we are going to use our Liquidity IQ column here to scan for these setups. So I'm going to click on this one, and I will select long bounce. These are stocks which are currently trading near a support level. Okay, let's check them out. So this one here, Avatar. All right. So this one here, clearly we are near this support zone. All right, perfect. What else do we have? Let me just maybe sort these alphabetically so we have a bit more interesting one. ADAC, trading near the support level. Adobe, not the cleanest one, but we're trading near this support level. And perhaps one more, just to exemplify things. Yeah, this one here, Aberdeen EM Equity Income Fund, whatever that symbol is, trading near this support level. So, and the expectation here is that, hey, since we are near the support, we may see a bounce towards the middle, in between support and resistance. And by the way, guys, the same thing can also happen for the short case. Yeah, because we saw it here, but price is nearing a resistance level, and then we had a beautiful bearish bounce off this resistance level. And if you're scanning for these, just for the sake of completeness, these would be called the short bounces. So in here, it will be these ones here, short bounce, because, it's going to be a bounce to the short side. Okay, so for now, we're going to focus on the long bounces. So that's step one. But you know what? Not every bounce is the same. Let me give you an example. What about this one here? I just randomly picked this one. We are clearly trading at a support level here. No doubt about it. 100%. But what else do we see? If I just scroll back a little bit, I mean, I see, I don't know about you, a lot of red in here. This is bearish. This is a bearish stock. So that's not really the kind of confluence that I'm looking for, because even though we may see a little bit of a bounce, perhaps, this is overall very bearish. And I believe eventually we're going to break through this support zone because we're so bearish. Perhaps it's going to pause a little bit, but the bounce off might not be very significant. Wouldn't it be better if we had also a bullish stock at the same time of being near a support level? And probably everybody will agree in this webinar, yes, that probably would be a better case. So let's try to scan for that. So condition number 2 for our bounce trade, we want to be bullish. So I'm going to use the MA Rush filter here. I'm going to filter for bullish stocks. All right. So now we're only seeing stocks where there's a green arrow here in our column here. So for example, this one here, ADAC. Then we had this one before. This one, if you scroll back at least, has been, at least as far as our MA Rush indicator is concerned, has been slightly bullish. What about this one here? ADI. Yeah, bullish. You can see it here, even though it's volatile, but in theory, it is quite bullish. What about this one here? ATI. It's a bullish stock. So these are the stocks that we're looking for. And these kind of stocks are of interest to us if they are also trading near a support zone. Because once again, what I said before, the trend oftentimes is your friend. And now you have a second checkbox in your corner. So we do have this long-term bullish stock, which happened to be trading at a support zone. So that could be a great opportunity to re-enter into this long-term uptrend. So what we're going to do now is we're actually going to filter now by the duration of the trend as well. So by clicking on this column, MA Rush, I can filter from high to low or from low to high. But let's focus on the high to low cases. And what comes up first? Eli Lilly. All right. Ozempic's diet drugs, weight loss drugs. It's been very, very bullish. Extremely bullish. You can see it here. It does not qualify for a pullback anymore because this correction here actually has turned trend radar all the way red here. But it is still of interest because we are still only had the correction to this support zone. So this is still a valid correction within this long-term uptrend. And I think a repetition of what we saw here, this deep correction, then it went up again, then we bounced off, of course, resistance. This may repeat itself. There is definitely a possibility for this. So I think this can be an interesting one, and we're definitely going to add this one to our watch list. So Lilly added to the interesting setups for next week. All right, done. What's the next one on our list? Westlake Chemical Corp. Yeah, this one, I think we had discussed this one last week as well. I forgot when it was. Is trading. It's been long-term bullish, but the correction was kind of deep. You see it here, and it's very volatile. I'm gonna skip this one. It's a bit too jaggy for my taste. Too many zigzags, too volatile. So even though this is considered technically a long-term bullish stock, because obviously, it's been going up over time, but these huge corrections in the move, not my cup of tea. I think we can find better opportunities. So this one I'm gonna skip. Okay. Next one, a German one. The Germans. All right. So this one here, Also not my favorite one. It's clearly after this up move in the consolidation phase. You can see it here. Price has been alternating between resistance up here, respecting it very nicely, and support down here. You know what? If you like these kind of trades where you are technically range bound. I mean, look at this. This is not range bound. I don't know what range bound is. You are range bound and you are now at the lower end of the range. Okay, this stock technically is very bullish for 999 trading days, even though we see big swings. This could be, you know what, an interesting idea to go long here, betting on the fact that, hey, we're going to once again visit or retrace back to the upper end of this range-bound channel. So why not? I'm going to add this one here. If you're a German, perhaps this could be an interesting one to look at. And perhaps one last before we before we continue. Look at this one. So to me, this shows very clearly the importance of these levels. So we had this massive, I don't know what happened here. We had this massive drop in stock value from 180 all the way down to like 130. But why did we stop here? Well, because we did have this important support zone. And to me, this is not a coincidence that we stopped exactly there. So, and these happened a few times before. Look at this. This seems to be a common pattern with this stock. And this, of course, has been the biggest correction. But once again, I like patterns on the chart. If you feel that, hey, perhaps history may repeat itself, and after a sharp drop-off, I'm not sure why this has happened with this particular stock or symbol, we may see the same thing happening again. A bounce off the support level, this falling knife will be caught, and we're going to go back to the upside again. So perhaps this could be an interesting one as well. So I'm going to add this one as well to our list of interesting stocks. All right, done. Okay, pretty good. So let's move on. There's still two other setups I want to go through. And guys, I don't see any questions coming in, so please don't be shy. Put them into the Q&A box if you have any questions. But quickly back to my slide. So this was the bounce setup. Now let's talk about the next one called the zone break setup. Once again, high reward, low risk. So a zone break setup looks as follows. It happens whenever either support is broken or resistance is broken. On this screenshot here, we can clearly see support is being broken or was broken here. And if this happens, we may see a big follow through in the direction of the breakout. So this can happen to the short case, but the same thing can happen to the long case as well. And this is once again a high reward, low risk setup because once again, we can place our stop loss just above this broken support zone, which is now acting as resistance. So it switches roles. Support can become resistance. Resistance can become support when broken. And it's exactly what happens. Here we place our stop loss just above this broken zone in the expectation and anticipation that price will continue in the breakout direction for quite some time. All right, so how can we find these ones? So back to our dashboard. And once again, I'm going to clear out all our filters. Done. And I will use our liquidity IQ column here to find stocks which are currently in a long break state. All right, I clicked on it. Done. 725 stocks are currently trading above their resistance level, above their nearest resistance level. Wow, that's quite something. So let me click on this one here. Boy, talking about parabolic stocks, this one clearly is trading about all known levels of resistance and support. Crazy. In fact, here we can see, look at this number here, 143. We can see that this stock has been in a long breakout state for 143 trading days. Not sure what's going on here, but this, of course, would have been an amazing long trade had we entered 143 days ago. Would we enter now? I personally would not. This is clearly overextended on all levels. We're far away from our averages here. Trend radar is completely green. All the MAs are being stacked. It's this little red dot here at the bottom. You see this little green dot, not red dot, green dot. It's green. That means all the MAs are being stacked. This stock is overextended. So here at the minimum, I would wait for some kind of retracement back to at least the first level here of MA rush. So this opportunity has passed. We're too late for this game. But let's focus on the ones where the opportunity has not yet passed. How can we do this? Well, very simple. In this case, we simply sort by the long break duration, the number next to our long break setup here, 249.75. Let's sort from lowest, like in this case, from lowest to highest, to see the ones which are recently, as of late, are trading in a long break state. All right. So for example, this one here, JP Morgan, what do we see here? Yeah, we recently, it's not the cleanest setup. We'll get back to how we can further refine this, but we can see here, we recently broke above this resistance zone. All right, well there. Arthur Gallagher, we recently broke above this resistance zone. GPI, we recently, oh, this is a special case. I'll explain this in a second, but we somewhat recently broke above it. And in fact, this is going to be a small change we're going to make to the dashboard as of next week. So here, why is there a number one next to the long break setup? Because clearly it seems like, hey, this breakout happened, I don't know, 1, 2, 3, maybe 15 bars ago, whatever that number is since this break happened. The reason for this, and it's a bit confusing, we're going to change this, is we first broke above it. We went all the way up here. Then we retraced and we entered into a zone break retrace setup, technically speaking, which lasted until Thursday. And as of Friday, we are once again back to a zone break setup. And this is why there's a number one here. But we're going to change this logic to actually count back the number of trading days and from where this zone break actually happened. Okay, so this is a small tweak which we will make in the next week with this logic. So as you can see, we always try to improve this dashboard step by step. Okay, now what I also would like to see, in addition to having a number one here, I also want to see MA Rush to be bullish, and ideally, I want MA Rush to be bullish for a really long time. So sorted by, you can see it here, by the duration. Perfect. So our first stock here is, in fact, Arthur Gallagher, a very, very bullish stock. And to me, a great opportunity to re-enter or to enter into this long trade. We're just making higher highs here. And if you were to enter into this one, put your stop loss just below this broken resistance level and, bet on the fact that, hey, this stock is likely to make all-time highs in the weeks to come. So I'm going to add this one for sure to our watch list. All right. Next one in our list, O'Reilly Automotive. Yeah, here once again we had this classic retrace case. We had the zone break, retraced down to the broken resistance level, which was acting as support, and then as of Friday, we were technically once again a zone break trace. This to me is a bit too late. It would have been nice to enter into this one a couple of days ago, and this would have been flagged as a zone break retrace trade at the time to enter long, and this could have been a great opportunity to enter into this long-term bullish stock. I'm gonna skip this for a second. GPI, yeah, same thing here. This was a retrace. Now, to me, this is almost a bit too late now to enter. I'm gonna skip this one too. If we see a retracement back to this broken level, this could be interesting to re-enter into it. And one more, perhaps this one here. Yeah, they're all similar. So we're going to change this logic with the number here. I think for the next scanning session, I promise you, or perhaps our next lunch and learn session, we will have this feature improved so that we can rely more on the setup duration number here. So stay tuned for this. But nonetheless, we find, a very interesting one, Arthur J. Gallagher, a beautiful stock, just recently trading above its resistance zone, the classic zone break setup. And for sure, this is going to be on our hot list when we analyze our setups. Perfect. All right. So with this, and this takes a little while to load, let me quickly go back to my slides because there's one more setup I would like to discuss. And if you know me, guys, you may have heard me. This is my favorite setup. It's called the zone break retrace setup. It's the rarest of all the setups that we've discussed. It's not as often as healthy pullback, not as often as bounce, it doesn't come as often as zone break. So it's quite rare. But oftentimes, the rarest thing in life are perhaps the most precious ones. So let's see what this one is all about. So in a zone break retrace setup, so in the bullish case here, price breaks above resistance. We have it here. So price breaks above it. It initially goes up, but then something happens. It retraces. It stops going up. The market tries to fake you out. It retraces, and it retraces back. Where does it go to? Back to the broken resistance zone, which is now acting as support. And exactly this level here, this moment in time, is a prime opportunity to re-enter long into this trade. Yeah, because once again, you would put your stop loss just below this broken resistance level, now acting as support, and you're hoping that price will continue in the breakout direction. And number 3, you already rated out the first fake out. So that's already passed. But to me, a very interesting setup. How can we find it? Back to the dashboard. All right, so let's clear up our scanner one more time. And what we're going to do now is we are using our liquidity IQ column here to scan for long break retrace. So I'm going to click on it. And once done, look what happened. Wow, we are down to only 12 symbols. Out of our almost 5,000 symbols, only 12 qualified for this particular setup. That's very rare. Okay, so which ones are the best ones? So we're going to sort by our MA Rush column, by the ones which have been trending up for the longest. And the first one, we saw this already, is of course our Gartner stock. Yeah, beautiful setup. For sure, we're going to qualify this as a trade idea for the week to come. Yeah, zone break, retrace back to the broken resistance level. It's a long-term uptrend. Everything comes together in here, and we even have a healthy pullback as per Trend Radar. Beautiful. Next one, Natural Resource Partners LP. All right. Not sure what this stock does, but certainly it has been bullish for quite some time. Let's analyze this a little bit. So trend has been going up for a while. We recently made all-time highs. Recently? In January, we made all-time highs. The stock was consolidating, which is very normal after a big move up for almost a year, for like 10 months. But then we broke. This could be a very bullish sign. We broke above this resistance level here. The stock is flagging a little bit, but now we retraced back to the broken resistance level. Interesting setup. I personally would wait for price to come down a little bit further here before I would re-enter into this trade, in the expectation that, hey, since consolidation seems to be done, we finally broke above this resistance level, we may see more upside action with this stock. So also I'm going to add to our list of interesting stocks. Done. And perhaps one more, Stryker Corp. Yeah, similar scenario here. Oh, this is an interesting one too. We are quite bullish. If I keep this on this view, we're making higher highs and higher lows along the way. We just made another historical high here. We broke above resistance on November 11th, and then price went up. It retraced a bit. Here, of course, I would wait a little bit more. If you see some more downside action towards perhaps 377, this could be an interesting opportunity to re-enter into this long trade as well. So I'm going to add this one as well to my list of interesting setups. All right, perfect. And the other ones, I don't think they will be so interesting because they haven't been trending up for that long. Let's just have a quick look at TPC, maybe real quick. Yeah, could be. I mean, they're all kind of interesting. If you don't require that upwards, the uptrend has had to be going on for a long time. We see here this only started on December 2023. Seems like a solid uptrend. The earnings gap here was almost immediately closed afterwards, a couple of days. We made all-time highs, and now we are trading near. We've been retraced back to this broken resistance zone. It could be also another opportunity to re-enter long into this trade. And by the way, guys, one thing which I forgot to mention, I wanted to point this out for a long time. I keep forgetting. There's actually a way to clean up your chart a little bit by changing the default settings of the indicators. Because here, it kind of looks convoluted. I don't know if you agree with me, but this looks kind of busy. So what you can do, you can go to the settings of Liquidity IQ and switch off a couple of things. So I don't like to see the zone break labels. I think that's quite obvious when a zone is broken. I don't need a label for this. I'm switching off the labels for liquidity capture events, and I'm also switching off the zone break arrows on the chart. And once done, look at this. Doesn't this look a little bit cleaner and less convoluted? I believe so. So this is a setting which I like to have. And there's one more tweak I actually want to do. I usually do. And we're going to add another feature to the dashboard to remember this setting. You can go here to settings, and these are your chart settings. And what you can do is to adjust the background color of your chart background. Where did it go? It's not coming up. Whatever. I like to keep this background to be black with no lines. Maybe that's something I'm going to show you guys after in a future session. Okay, so let's recap. What did we find? So step number 3 in our process is to go through our hot list and see which setups are actually the most interesting ones. So I'm going to go here to end of day scanner and select our hot list. Interesting setups, 2024, November 23. So, it looks like we only have 3 in there, but that's because we have a filter on. I clean the filter and we can see, yes, we have 1, 2, 3, 4, 5, 6, 7, 8, 9 setups in that watch list. All right. So, oh, wow, it only came up now. Something might be slowed down here in my dashboard. I hope you guys can still hear me properly. I'm a little bit worried about that, connection warning, which I had. Nonetheless, let's go through this setup. Let's start with, let's say our bounce setups first. I'm going to skip the German one here. It's been very range bound. Not many of you will trade German stocks. But the idea could be here, this could be bouncing off to the middle of this horizontal channel. We're going to skip this one. Lily's interesting. So Lily, of course, is super, super bullish and has just seen a very deep correction to the downside. We're now trading at 747. It used to be at 972. So a huge correction. This could be an interesting opportunity to enter long into this trade. And if we were to enter long, I would place my stops and targets as follows. So let me go here to the settings of the indicator, because the indicator will actually tell you where to put your stops and target. I'm going to go all the way down and enable show target long and show stop for long trades. All right, once done, I can see clearly where the indicator suggests my targets and stops to be. So the stop would be at 722.09. See this line here, which is 3.47% from current price. And my target at a whopping 947.07, 26% from current price. And if you hover over this line here, you can see this is a reward to risk ratio. See this right at the end? RR of 7.68. So this is a great reward to risk ratio. And you know what? Because of this, I'm going to just put a little annotation here. In our trade notes, I'm going to say here, using our audio dictation feature, long-term bullish, great reward to risk ratio, worth a shot. Perfect. It's not perfect English, but it's enough for me to keep, to remind myself why I'm in this trade in the first place. And I'm going to also enter or add this screenshot that we have right now. So I'm going to add to it using our screenshot icon. This takes a couple of seconds. We are working on making this a bit faster. It has to do with server speed. So this is now being added. And after a couple of seconds, you just have to be a bit patient, you will see the exact screenshot of this chart here being added to this dialog box, ideally. And while I'm waiting here, let me see if there are some questions.
We do have 2 questions, Daniel.
Yeah.
So we have one question. from Cindy Eldridge, I think it's in respect to this setup, is when to enter. Like, what are you thinking for an entry
Yeah.
price?
There we okay. Now the screenshot is there. You can see also our stop loss level and our target levels are there. Cindy, I think this one, I mean, we are right at the support zone. So if nothing crazy happens when the market opens on Monday, you don't have a big gap up, which would destroy our reward to risk ratio, or maybe a huge gap down, which invalidates this level here. And I would almost enter at market levels for this one. Yeah,
Perfect. And we have another question from Moishi who says,
I
how
know.
do you know when not to take a trade on a long bounce? Because he took one on Amazon, but he got stopped out around 201. What would you say about that?
Yeah, I mean, as I mentioned before, getting stopped out is unfortunately, oops, uh, part of every trading strategy. There's no such strategy which will work all the time, unfortunately. So getting stopped out is normal. But since your reward to risk ratio, especially on the bounce trades, are so high, so just try again. Hopefully, the next trade will not get you stopped out. But we can have a look at Amazon a bit later when we have our symbol roundtable. Yeah. And I see Philip's question here. Can these scans be used to pick options? Yes, Philip. In fact, we do have some options support also in our dashboard. I'm going to keep this till the end, Philip. Perhaps in 10 minutes, I'm going to cover this question in more detail. Okay, so back to my watch list. My dashboard just restarted for some weird reason. So back to my watch list. So Lily, we did our annotation. Very good. What's the next one in our list? So ICFI International. Oh yeah, so here a long bounce trade, long-term bullish for 986 trading days. You know, I kind of like this one. Again, this is crazy a reward to risk. You're risking eight, well, actually not so crazy. While you're risking 8% because your stop loss is so far below. I would even put it maybe a bit closer here, and you gain to stand at least around twice as much. So an interesting idea uh, in this case. So I'm going to add this one as well to our at least things to watch for next week. So I'm going to add also another annotation here. And I'm going to say, using my dictation feature, a long-term bullish stock, seeing a strong retracement right now. This pattern has happened in the past before. We are looking for a repetition. And let's see if my dictation did not work. Let me try this one more time, guys. We're still working out the kinks here. A long-term bullish stock, seeing a deep correction right now. This has happened in the past. We are looking for a repetition. All right, perfect. It's in there. I'm going to add the screenshot to it as well. So this could be something to keep in mind for the next scanning session. Perfect. All right, edit and closed. Next one, Gartner. Yes, that is probably my favorite one. And one really cool thing is if you are using the trade notes feature here, first of all, you can always scroll back to prior notes that you had. So this was a note from November 6th. But now if you use the screenshot feature, it will also take into consideration all the annotations that you have on the chart. So this one is a beautiful setup. Let me just comment on this one real quick. Long-term bullish and retracement back to broken resistance, now acting as support. Great reward to risk ratio. Perfect. It's in here. I'm surprised how good this dictation tool understands my German accent. Anyways, adding my chart tool. So to me, probably my favorite setup of today. Yeah, this is a very beautiful setup, and we can see it here. And I guess this did not go in the same place. Let me just add this back here. Perfect. So you can see it here. The annotations are also now in the screenshot, and these are kept forever. So you can always go back now to your trade log and review why you have considered a certain stock for a setup. So I'll close this. Next one, NRP. Yes. So here, I probably would wait a little bit longer for a deeper retrace. So we're a bit far away. We're at 106. I think it's not off the question that the retrace will come all the way down to 102. And to me, that's a judgment call. If we get this retracement, yeah, we can consider entering around this level. So here, I'm going to add a trade note. Wait for a retracement around 1 102, then potentially enter long with a tight stop loss. Done. All right. Okay, trade. This is also done. I'm also going to add the screenshot to this one. And Marsh, I'm going to get back to your question in just a bit. Perfect. So this is added. I'm going to close it out. Stricker Corp. Yeah, this is a pretty cool one too. It's been only trending for 406. Well, only it's actually quite long, for more than a year, trading up. And we have a nice zone break retrace scenario. Also for this one here, I think it may retrace a bit deeper. So perhaps to a level like 377. Sorry. We may see this one. So here I'm also going to be patient, waiting for a deeper retracement to 377 and then potentially enter long. All right. Wait for a retracement to around 377, then potentially enter long. Done. All right. I'm loving this tool. It's so much easier than typing it in, especially if you're doing a webinar at the same time, adding the screenshot at the same time as well. And I almost think, I don't know about you guys, whether we should always have the screenshot right here automatically pre-populated. So, because I think almost every single time I would like to see the screenshot of the trade. So maybe that's something you guys can give me feedback on. All right. Parson Corp. This is in a long break state. Yeah, this one clearly I would wait. It's too far away from this support zone. I think we may see a little bit more of a retracement here. Here I would be conservative. So once again, wait for retracement to around 93 for this one. So one more time. Wait for a deeper retracement. We may see one more pullback to support and then consider a long entry. Perfect. Excellent wording. And I forgot to add the screenshot, but it doesn't matter. And Arthur Gallagher, this is in the long break state. Yes, and I definitely want like to get one long break stock in here. This one just made an all-time high on Friday. That's this candle here. That's Friday's candle, I believe. I didn't check the whole history, but it looks like this was definitely an all-time high. We are now trading above resistance. I think this one may as well see another push higher. The indicator shows the target at 321. I think that's a conservative target. In the interim, next couple of weeks and month, we probably will see even higher levels than this. So this is also an interesting stock here. Zone break above resistance. We are likely to see all-time highs in the weeks to come. Stop around 295, target at around 321. A little a quick reminder, I always have to say 321, not 321. And let's put the screenshot in here as well. All right, guys, this is it for our hot list. We had one more here, but if I recall correctly, this one, yeah, was a bit too jaggedy for my taste to see these big moves. And we already moved off this support level here. So maybe not such an interesting stock. And I think the reason why we picked this one is because it was in a pullback scenario. Technically, it's what we call in the magnet zone. Magnet zone means it's in between, almost in the middle, between support and resistance. We see this here. A bit too volatile. We have these bigger pullbacks every once in a while. I'm quite confident with the ones we've picked so far. So this one, I think I'm going to stay on the sidelines with. All right. So now let's look at some options. Okay, so Amazon. Moshi wants to look at Amazon. Let's have a quick look. So I'm going to go to our end of day scanner and let's check out Amazon. Oops. Of course, I need to be able to type it in properly. Amazon, we are at a short bounce. So I'm not sure where you entered, Moshi. Maybe I can quantify your trade a little bit. I mean, Amazon, oh, you probably entered on the zone break retrace. Is that what you did? And now we're trading below? Yeah. Unfortunately, so these setups, even though these are my favorite ones, they don't always work out. So if your stop loss was too tight, then yeah, you would have gotten stopped out here on the zone break retrace trade, unfortunately. If that was your trade, Marsh. It's still very bullish, but if you look at the history, you know, some of these bigger moves down, they can be quite substantial. I was hoping, and I think for good reason, we picked the stock last time. We had this earnings gap in Amazon. gap down. And I was hoping last week, hey, we may fill this gap in the days to come. It didn't pan out. Yeah, this is what trade, it is sometimes the way it is. Cindy wants to look at NVIDIA. Okay. NVIDIA had earnings, exceeded expectations, but it looks like this was already priced in that NVIDIA would be exceeding expectations. This is why it's so complicated to try to interpret earnings and what it will do to price. It is super complicated because you never know what is already priced in the market. It is almost impossible to know. So in this case, even though NVIDIA did exceed, price did not move much. But an interesting one. Um, Technically a long break case, but we are trading right at this resistance level here. We went up initially, then down again, now right at this broken resistance level. It could be a very interesting opportunity to re-enter into this trade, also considering the fact that we are at a level 3 pullback as per trend radar. So yeah, I like this one. Cindy, looks good. Yeah, Chris wants to know, can you remind me what the trends aligned column does in the scanner? Yes, Chris, no problem. Let me just make my scanner a little bit bigger. I'm going to go here to this column. I'm going to enable it to this one here. It's enabled. Okay, so this column here, trends align. This column also refers to our trend radar indicator. So the indicator down here. And basically, what it does, it counts how many of these dots that we have consecutively, starting from the last bar. And now, of course, the question is, what do these dots represent? Well, they represent how strong a trend is in layman's terms. So the way trend radar works internally, it keeps track of these short-term trends, medium-term trends, and long-term trends by using a number of moving averages from fast MAs to slow MAs. If these MAs are sorted, meaning the fast MA is above the not so fast one is above the medium MA is above the slow MA. If these are sorted that way, we will get a dot here, a green dot if they are sorted from high to low, from fastest to lowest, or a red dot if it's the reverse sorting. And this can often be a sign, hey, we are in a very consistent trend. And I agree. So here, a number 14 shows quite a consistent trend as of late. So price is very nicely moving up, making higher highs and higher lows. This could be one interpretation. Let me just quickly, just for the fun of it, sort by this number here. Let me just go to all the bullish ones and sort from longest. Oh boy, this must have been what is this stock here? This has all okay, that's the price issue. So let's ignore this one. Let's go to SFP. Wow, what a bullish stock. And you can see here, wow, MA Rush been printing these dots since July this year consistently, and this stock, of course, is very, very bullish. So this can be a sign of to see, how strong a trend is, how consistent a trend is. All right. Okay. Philip wants to know about options. So how do we support options trading? A great segue, Philip, and I'm going to get to it, and I'm just going to quickly remind everyone of two things. The first reminder is that, yes, you can get our free ebook by going to this link here, tradingindicators.com/power of free. And this link is also in the chat box. That's number one. Number two is you can get a free trial if you haven't gotten it yet at tradingindicators.com/view. This link is also in the chat if you want to try out our dashboard. That's number two. And number three, and this ties in with the options question, we actually do have a dedicated free options webinar tomorrow at 2 p.m. with the option professor. And as I mentioned at the very beginning, we are at a crossroads and we are in a very unique situation this year where we have many, many affordable options. The VIX is at a low. It's been at a low for a while. These are great opportunities if you want to buy options. If you're an option seller, maybe not so much, but if you want to buy options, call options, put options, or a combination of the two, now is a very unique time. And how you can take advantage of these unique opportunities, Jim Kenny, the option professor, is going to share with you tomorrow. So here's the link, and this link is also in the chat. Now, let me go back to Philip. Philip wants to know, how does our dashboard support option trading? Great question. So first of all, let me show what we can use for this. So we do have a column in the dashboard called optionable, which shows you a little check mark in the scanner here if two things come together. The stock has an options chain, and secondly, the options chain is reasonably liquid. If these two things come together, then this check mark is placed. And you can sort by this or filter by this. So use the filter here, sort by optionable. Now this filters down quite a bit. And for example, let's say you are interested in perhaps buying a call option. Yeah, what you can do is to let's just go back to one of our favorite setups. Let's go to a long break retrace. And what comes up here, and let me just also take this one out. What comes up here, for example, of these optionable symbols is Gartner. Of course, Gartner being quite expensive, so your options contracts will be quite expensive. But if you were to buy, for example, an out-of-the-money call option, maybe with a price around 130, or even longer if you want to get it cheaper, maybe 140, I do believe this is a very healthy uptrend, maybe even higher. And the expiration date is far out. I mean, maybe buy a call option at what, 550? The expiration maybe 2-3 months out. I'm pretty certain that price will, after 2-3 months or less than this, at a price which will exceed this. This could be an interesting option trading idea, for example. So how this can work and how you can take advantage of certain setups like this one, and how to pick your expiration date, how to pick your strike price. This is something we're going to cover tomorrow. So dial in for this. But yeah, certainly the dashboard can help you find some interesting option trading idea. It also will alert you of things such as when is the next earnings date coming up, what is the current volatility of the symbol. You can see it here. So Gartner, low volatility. So another reason why option pricing probably are quite affordable, especially if they are of the money for Gartner. So Phil, I hope this helps with that. All right, guys. Any other questions? So we did the trend align. That's done. Thanks, Chris, for this. We looked at NVIDIA. Yeah, Mosh, for your Amazon trade. Sorry, I like that trade too. It just happens sometimes. All right, that's done too, guys. Do you have any other questions? All right, I don't see any other questions. So let me quickly go back to my slides because I also want to point out that if there was a question which was overlooked, don't worry. You can always reach out to us through our homepage, tradingindicators.com. Open up the main menu, pick the contact item in there. This will open up a new page with a contact form on it. Put your question there and your contact request, your question will go straight to my inbox, and we make sure to answer all these questions as soon as we can. So that's always, yeah, a possibility for you as well. All right, let me see. Are there any questions? Very poor liquidity on Gartner. Okay, yeah, maybe depending on, I guess, which expiration you're having, Aubrey. But yeah, so sometimes, of course, that's always a double check to see. Even though, our optional column has a check mark here, it can be that the options chain is not very liquid. Of course, our calculations here, they are based on some indication that we see that it might be liquid, but you should always double check, in fact, before you trade the place, how liquid the options chain is, how many contracts are actually being traded, and so forth. So in this case, maybe because Gartner is so expensive as a stock by itself, which, and the volume is not too high, this may lead to the fact that the options for Gartner are not too liquid. All right. And of course, one thing to also check is how big is your spread between call and put options of similar price strike price, because eventually, you have to sell. What's your bid and your ask, basically? Eventually, you have to. Sorry, what is your bid and your ask, I should say. So for the call option potential you want to buy, because if the spread is too big and you will lose too much on that spread, it may not be worthwhile. But once again, something we're going to cover tomorrow in tomorrow's options webinar. All right, guys. With that, well, thank you so much for attending, everyone. It's been fun. I hope for you too. I hope everyone found some interesting setups to consider potentially for the week ahead. And I'm already looking forward to our next scanning session, which will take place next Saturday at the same time. We also have, what do we else we have? We have our options webinar tomorrow, and we have our lunch and learn session, as always, on Tuesday at 12 p.m. Eastern. So hopefully we'll see you at any of these new events. Until then, guys, happy trading. Enjoy your Saturday and talk to you soon. Thanks, Niklas. Thanks, Homer, for attending. Bye-bye, guys.